My son is in soccer. This is his third year in soccer. And when I asked him if he wanted to play soccer this year, the first question he asked me was, "Hey, Dad, are there going to be snacks after the game?" Yeah, there's going to be snacks. Do I have to play in the game? Yeah. Okay. Yeah, let's play soccer. And so this is his third year of soccer. And about 2 weeks ago, I was sitting next to another one of the fathers, and we were talking, and he pointed something out that was in front of me, but I didn't really see it. And he said, you know what I love? It just they're having fun. And it's almost like I couldn't recognize it because it's not something normal that an adult does, but that's in fact what was happening. Like, my son was having fun. He's not really good at soccer. He likes the snacks more than anything else, but he loves being around the other boys, and they have fun. And it's just so interesting. And it's almost like when he pointed it out, it was like, oh, yeah, you're right. They're having fun. That's what fun looks like. Oh, yeah. And I think sometimes it's hard to see things that are in front of us because we're in our own mind, we're in our own world, we're caught up with our own issues or thoughts or experiences, and we can't kind of notice things that we might have been able to notice in the past. And that is pretty clear to me that we should be talking about gold when I've been thinking about what might be in front of us that we can't see because of what is going on in our minds. And so that is what I want to discuss with you on this weekend podcast. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme of this weekend is this the final cleanout? And when I say that, I'm talking or referencing gold and what's going on with gold, and just how I couldn't necessarily recognize what it was that my son was loving so much about soccer and soccer practice. I think it's hard sometimes for us to see what's in front of us, especially if we are really attached to what happens. And anyone who has owned gold over the last 3 years has a lot of attachment to it going up and not going down. And whenever a human is attached to an outcome, it is very hard for him or her, to really see what's going on. So I spent quite a bit of time researching and looking for what might be happening or why it's happening. And for sure, I found a very, very strong correlation, which may even be the causation, which can help us understand where this final cleanout might end. The first image price chart I want to show you is the Japanese yen. Now on this screen, when the Japanese yen falls, or when this price line falls, it's actually strengthening. And the reason I had this price chart built this way is because, and you probably can't see it because this chart is really small on your computer screen, but the numbers go from 76 on the bottom to 133 on the top. And this is how many yen the dollar can buy. So when the yen is up here, where that red dot is, the US dollar can buy about 126 yen. And when this red dot is down here, the US dollar can only buy about 76 yen. So during this time period, the yen strengthened about 40% against the US dollar. The yen got 40% stronger against the US dollar from 2001 to 2011. Now this red dot right here, that's where gold bottomed. And this red dot here, that's where gold peaked at $1,922 in September of 2011, and it bottomed here in March of 2001 at about $250. And during the exact same time period, the yen was strengthening against the dollar, or the other way you could say it is the dollar was weakening against the yen. And then things turned around. Literally in September of 2011, the yen started weakening again against the US dollar, and it has so far weakened 40% against the US dollar. I then also want to look at the US dollar. Now, the reason I brought up the Japanese yen and the US dollar is because those are the two most traded fiat currencies in the world. Actually, any currency in the, whether it's fiat or non-fiat. Fiat means backed by the government. These are the two most traded currencies on the planet. The euro is right in there now, but the euro has only been around since '99. So here you have the US dollar, and this red dot up here is where gold bottomed at $250, and this second red dot here is where gold peaked at $1,922. During this time period, the US dollar weakened 33% against the basket of stocks that it is compared against. Now, the biggest currency it's compared against is the euro, and then you can see here it strengthened by 15%, again, against that basket of currencies. So as the dollar weakened, other currencies strengthened, and as the dollar has been strengthening, other currencies have been weakening. Now, the interesting thing is the U.S. The Fed of the U.S. government isn't necessarily overtly printing U.S. dollars. They did a lot of money printing starting over here in 2008, but that has just kind of stabilized. What I really notice is really how the Japanese yen and the Japanese government has come out, and they have just said, we are going to devalue our currency. And when they started that, the U.S. dollar could buy 76 yen, and today the U.S. dollar can buy 108 yen. I mean, that's impressive over less than 3 years. So we have some, for sure, correlations between two of the largest currencies on the planet and gold. Now, this price chart here is actually a price chart of gold, and I have at the bottom left corner where gold bottomed in 2001, and I have the red dot at the top where it peaked at $1,922 in September of 2011. And you can see, because I'm going to put it in, that gold went up about 760%. And since then, gold's down about 40%. And two of the biggest correlations that have moved with the same, almost exact same movement is the Japanese yen and the US dollar, the two largest fiat currencies in the world. Pretty impressive. I think there's for sure an immense correlation there and a very high causation that what's causing this are these two currencies. Now, there's a higher correlation with what the yen is doing, or the Japanese government is doing with their yen and gold. As you can see here, as gold went up 760%, the yen strengthened 40%, because again, when you see this line falling on this specific yen currency chart, that means the US dollar is buying less and less yen. So back here, the US dollar bought 133 yen, and right here, the US dollar could only buy 76 yen. So pretty big for sure correlation, and I think there's a very strong causation between the yen, the manipulation in the yen, and what is going on with gold. So the question then becomes, where does this end? Where does this clean out end with gold? Gold is already down 40% over the last 3 years. Extremely painful, frustrating, stressful, anxiety creating for anyone who has anything to do with gold over the last 3 years. It appears to me that the yen wants to get back up to this, call it a burnt orange, burnt brown color line here, which is about 20% higher from where it is. It looks like from a technical point of view, this is where the yen wants its next major move will go. And again, that could be anywhere just below the line or anywhere just above the line, but that's about 20% away. Now, it's hard to see on this chart down below on the gold, but 20% lower on gold gives you this horizontal line. And this horizontal line has an incredible amount of support back in 2008 and 2009, or in that case was an incredible amount of resistance. Gold could not break above $1,000, couldn't do it in 2008, and had this huge inverse head and shoulders. And then when it finally broke above that $1,000, it raced up 92% to $1,922. So from a technical point of view, this $1,000 mark used to be a ceiling that gold could not get through, and then once it broke through, it moved straight up. It's very likely that gold could break, and it already has. It has broken the 1165 today. And just 20% below, generally speaking, is that $1,000 mark. So we could see the yen go up 20% as gold finishes its clean out going down 20%. And that absolutely would be something that cleans out the precious metal industry. Gold is not going out of business. Silver is not going out of business. Precious metal mining sector is not going out of business. The resource sector, specifically the precious precious metal mining resource sector has a very long history of these extremely painful cleanouts, and this is turning out to be as painful as any other one. I will say the more painful the cleanout, the bigger the upside. As I told you before, how gold went up 760%, it would probably not be unheard of to see this go up 500% more at $1,000, which from this standpoint, me saying gold would be at $5,000 almost makes me sound ridiculous and part of the tinfoil hat club. But, you know, if you've been around investing long enough, you know and you've experienced that prices can go much higher than you could ever imagine and go much lower than you ever could imagine. To further support this $1,000 gold price, and I'm not saying I want it to go to 1,000 or I'm excited for it to go to 1,000. I'm just looking for evidence to see where could this go. I got this price chart from Casey Research. Casey Research does excellent research in the precious metal mining sector. And if you look over to the red oval, you see there's two bars, a black bar and a gold bar, and that's the industry average with a little asterisk after the abbreviation of average. The industry average for the largest 15 primary gold producers in the world, at least publicly traded gold producers in the world. The black line shows you what their all-in costs are for an ounce of gold. So back in 2013, their all-in costs for an ounce of gold were about $1,100. And today, a year later, they've lowered their expenses to below, that line right there is 1,000. So let's just say their all-in cost to produce 1 ounce of gold is $1,000. So this could also support the idea that gold could have a correction as low as $1,000. Now, clearly, any amount of time gold spends below $1,000 is going to start having many companies shut down, file bankruptcy, shut down their mines because they're not going to, quote unquote, print an ounce of gold, make an ounce of gold at $1,400, $1,500 an ounce when they're losing $400 or $500 per ounce. So this does support the idea that gold could have one final clean out and fall as low as $1,000, while the yen goes 20% higher to about 128, meaning the US dollar could buy about 128 yen, which it would be pretty impressive. And that would really just put it back to its 2001 currency exchange. The last piece of data I want to show you is the premium people are paying for gold and silver. Now, this price chart looks a little crazy. It's an open, high, low, close with using Japanese candlesticks. But what I want you to just notice, and I'll tell you, is what people will pay or not pay for an actual ounce of gold or silver. Now, CEF, which is what this closed-end fund is looking at, is half silver, half gold. This is where gold peaked, this little red dot. Today, literally, you can go buy CEF, and you can buy gold and silver for 10% below melt. Seriously, you can go do this today, right now. You can go buy gold for 10% below what it's actually worth. So if gold was worth $1,200 today, that's its melt price. Right now through CEF, you could buy that ounce of gold for $1,080 or $1,080. Literally, you can be buying gold for 10% off. And that's what this line way down here, the farther this line falls, not this red one, but all these lines, the farther this falls, the bigger discount to melt you can have. And right now the discount is 9.5%. I just rounded it to 10% for ease. But it's been as low back here in 2001. It's been as low as 18.5% off the price of gold. That's incredible. I mean, literally, there's very few free lunches in this world, but buying gold below melt at 10% below melt is pretty close to a free lunch. Doesn't mean it's not going to go lower, but you're getting a free, basically $100 of gold right now. Pretty impressive, but it can go lower, and gold bottomed back here, so we know that there could be some more pain. I don't necessarily want there to be more pain. I have lost money. My clients have lost money in this one specific strategy that has people buy gold. That strategy is called the long-term economic cycle. As you saw from a previous chart, we were up 760% between 2001 and 2011, a very nice 10, 11-year run. And since then, the last 3 years, gold is down 40% And if you were in any other type of leveraged position, it would be down more. So from a technical point of view, we do have more downside, and certainly looking at that in conjunction with the yen and the US dollar, it's supporting a lower gold price that we could have one final clean out. As far as where it goes after the clean out, I think it's going to be significantly higher. It's going to be a number that would just seem absurd to anyone today, but it will break up and past and through its inflation-adjusted price of about $2,400. So if it does, in fact, bottom at $1,000, you have an easy 140% gain in front of it, which means any sort of leverage play like GDX or GDXJ, the miners or small cap miners, is going to move up incredibly fast, probably 7, 8, 900%, as gold does a 100% move. That's in front of us still. The takeaway: this is not the time to be righteous about your beliefs of what the market should do or what gold should do, or being righteous that you're down 50%, so you're just going to hold and be down 70%. This is not the time to be righteous. Be good at taking losses so they do not become big losses. This is just another step in helping you secure your future, your portfolio, and your life. Until next time, this is RC Peck.